Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 21st of January. I'm Daniel Lam, your host for the podcast. Political events have been abundant so far in 2026. We already got what happened in Venezuela and what is going on in Greenland. In Asia, Japan's Prime Minister Takaichi had called a snap election on February the 8th to seek voter backing for increased spending, tax cuts, and a new security strategy that can accelerate a defense buildup. She promised a 2-year halt to a consumption tax of 8% on food, adding that her spending plans would create jobs, boost household spending, and increase other tax revenues. Calling an early election allows Takaichi to capitalize on her strong public support, to tighten her grip on the ruling Liberal Democratic Party, and shore up her coalition's fragile majority. Her admiration for Abenomics is very well known. She came into power in the fourth quarter last year, and the dollar-yen has been grinding higher since, alongside rising JGBUs. This reflects her wish to pursue more expansionary fiscal policies. She would also love to loosen monetary policy, but the inflation situation in Japan warrants further mild tightening. Now, in the near term, dollar-yen can go higher as we progress towards the snap election date. However, we see increasing risk of intervention from the Ministry of Finance once dollar-yen gets to around the 161 level. Then after, investors would most likely be refocusing upon the fundamentals, i.e. the diverging monetary policy between the US and Japan, with the loosening Fed and the tightening BOJ, which narrows the interest rate differential between the two countries. This puts pressure on dollar-yen and may take it back to the 154 to 157 area. Hence, there's likely to be reasonable volatility ahead in dollar-yen. It is going to influence how Japan equities trade, and more importantly, investors need to watch out for short covering in the yen against the dollar. Yen is one of the primary carry trade short currency. Any sharp short covering can lead to volatility across global assets. Now, back in the August 2024 episode, investors were forced to unwind on the longs that they bought by shorting yen, even in non-FX assets such as US technology stocks. While we believe investors are much more prepped for yen volatility this time around, sharp short covering is a risk that one needs to monitor and be aware of. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.